Welcome. Welcome to the new YouTube channel about VIX ETF trading. My call name is the VIX Trader. This is my first YouTube video. It's my inaugural video. It's probably not the best quality video. I hope they get better as time goes on. I apologize if it's not the greatest quality. I see a lot of fancy stuff out there and I'm certainly not up there yet. Maybe I will be one day. Hopefully I will be. I trade VIX products pretty much for a living. That's my only thing I do. I thought I'd start making videos just to share with people how to make money trading VIX products. This first video I thought should be about why I trade VIX products versus other things such as stocks, bond ETFs, oil ETFs, or other things out there, why I just veered towards the VIX. I trade only one product. I usually short one product, TVIX. That's the thing I trade the most. There are a few other products which I'll get into later on in other videos, but for this particular purpose, I'm just going to stick with one ETF, the TVIX. Just so you guys know, I short it, which means I sell it first at a high price and buy it back at a lower price. Meaning essentially I'm buying it hoping that it goes down in value, not up in value. So it's not something you buy, you hope it could double or triple, you buy, hope it drops by 20, 30, 50%. And that's how you make your money, by shorting it. I thought I'd get into first to why I short the VIX ETF products. In general, bull markets last a long time. You will see that this is the spiders, which is the same as the S&P 500. You will see here, S&P 500 and the spiders is the ETF from iShares. I use the spiders as a proxy for trading the TVIX. I want to show you an investment research firm that talks about bull markets, and you will see here that bull markets right here last about 9 years. Bear markets last about 1.4 years. In general, policymakers in our country, the Federal Reserve, the federal government, state governments, really want a rising stock market. This isn't by accident. This is Federal Reserve policy, government policy, where they want the wealth of Americans to go up. And so they're going to do everything they can policy-wise to keep this thing going up through tax cuts, spending plans, along with other initiatives they do. So you'll hear that in the news. So the market generally reacts to news about good economic news that the government wants, that helps the stock market to go up. They call it the wealth effect. As you see, the spiders goes up. Inversely, the VIX goes down as the spiders goes up. So if you click on the TVIX, look at this. It does a lot of reverse stock splits. I mean, this is supposed to be at $1 million, 1.8 million, all the way down to essentially $42, which is the current price. And if we do a weekly, this is a monthly chart. It's been around since 2013. But if you see, let's just do a weekly chart of it, and you will see that you can see better that it generally still has a downward direction. So what I try to do is when the market every once in a while has pullbacks where it goes down a good 5, 10, 15%, and this thing will spike like this. A good example was this past February, this past year. So in February, you see the market went down here. In February, it went down again in April, it went down again here in May. And you see as the market went down, next chart you'll see, conversely, this TVIX spiked. But every time it spikes, with these bubbles, you'll see it comes right back down. And it comes back down rather quickly. I mean, it spiked from $70 all the way up to $150. So it's more than doubled really with a period of 1 week. But in the same token, in a period of 2 to 3 weeks, it came right back down to the same area. It spiked up here again from about $69 to $111, came right back down again. And does the same thing. It keeps going down, down, down. So to me, that's like easy money because you just look for the spikes. You don't have to do a whole lot of research and stock market trading. You just look for the spikes whenever the market goes down significantly. A good example, so this thing always has one direction essentially. It just keeps going down in the long run. The word to call is decay, in the market. The thing also spikes when the VIX spikes. I try to see with the VIX, anytime the VIX is above 25, as you see, this thing goes up. So you just, if you want to know when do I short, anytime the VIX above 25, we got up to 40 here, above 40, even up to 50. By the time the VIX is elevated, the market likes the VIX to be between 16 and about 11. But once in a while, some news comes out, causes the market to go down a lot. It'll spike to about the 25, 26 area. That's a good time for me to short a little bit, and sometimes you can short up here if you're lucky enough to get it, because you make some good money there, because it went from this particular period, where it went from $150 all the way back down to $72. So the VIX guarantees that in a short period of time, period of weeks, even if I don't trade it very well and say like buy it down here, and it goes up $130 higher to $150, I'm pretty sure in the long run, in 2-3 weeks, for me, long run is 2 or 3 weeks, this thing's going to come right back down again. Versus if you look at some stuff like bonds, you can buy bonds. This is a monthly chart. You can buy bonds up here and have it go down many, many months, 6-8 months in a row, and you may not get that money back, 2 years later. If you buy right here somewhere, this is a monthly chart. For 2 years it went down. It took essentially 4 years from the peak of, let's just say, 2012. I didn't get back up here till 2015. That's 3 years. So if you buy somewhere around here, once again, this thing is going down. This is a bond fund. And we don't know when it will get back up there. It could take another 2-3 years for it to get back up there, because it's not going to go up like this, but it's going to probably go down like that as the channel goes. So it could take it 2 or 3 years. So if you make a trade on here, and you have this position at whatever, $131, $120, it could take years for you to get your money back. Versus the TVIX, this thing just comes down within weeks. It spikes, comes down within weeks, not months. This is a daily chart. So even in a daily chart, even in a daily chart, in a matter of a week, this thing comes right back down to where it started off before. So let's look at something like oil. The bond for the oil around here was $150 a barrel. It's never going to back up there again. There are people who bought around here who will never get their money back. There are people who bought around here who will never get their money back. And we'll see how long it takes for people who buy around here, to get their money back, to go back up there again. But this thing could go down a lot, and it could take months and months to get your money back. Same thing with gold. Gold peaked around here, around 2012. Now, all the people who bought around here from 2012 to as recently as, a few months ago, who knows when they'll get their money back. But with the VIX, the TVIX, this puppy comes right back down within a few days or a few weeks. Same thing with silver. Anybody who bought silver around here, SLV, that's a commodity stock. It could take a month to months. Who knows how many years it would take for them to get their money back. They bought about $28, or $24. This is a monthly chart. Monthly. This has been like 4 years. How many years? 2013 before these people may ever see. Who knows? I mean, they've been holding on for 10 years. So that's why I trade the VIX, because I feel like if I make an error and maybe buy a short at a bad price, as long as I don't over leverage, meaning I don't buy too many shares, I'll be okay. The trade will work out. And if you look at like some stocks in the long run, like Microsoft, Microsoft recently is doing well, but however, it peaked around here, around 2000, and it didn't hit this price around here of $46 till that 2014. So it took it 14 years to get back to this price. If people bought it around here, this is around 2000. It took it up to 2008. It took it 8 years to get back. And you can say the same thing with Intel. These things peak up around here, and this is a monthly chart. It took months and months and months for them to get their money back. As opposed, I'm not willing to